Hi guys, welcome to today's session. Feels weird to be back. It's been how many days? I think the last session we did was on the 12th, or at least the last session I did. I am just going to send the link in to Discord and make sure that it's the right link because StreamYard does this thing now. Streams. Yeah, it's the wrong link. So StreamYard will. Here we go. It streams both short form and long form. So like horizontal screen and vertical. And I shared the wrong one. So anybody who's clicking that was going to have a vertical version of me popping up, which isn't ideal. But welcome, guys. Welcome. I apologize for being MIA for the past sort of 2 weeks or so. Well, I guess it wasn't 2 weeks. It was just last week. But I was suffering from a really bad cold and just being generally run down. As you can probably still hear my voice, I'm not 100% better, but we're getting there. Hence why I'm all, fluffied up today, keep making sure that I'm, staying warm and having enough fluids. How are we doing, Robert? Hope you're all good, my friend. Hope you're all good. But yeah, we're back. Today is going to be one of those sessions where I think we're just going to have a bit of a catch up. I won't be doing any specific Darwin analysis today. Yeah, definitely feeling better. I'm, ready to rock and roll. It's just like the tailwind of having a cold. That's kind of where I feel now. But definitely, 100% better than I was last week, which I'm really happy about because I'm speaking at the Finance Magnates event tomorrow in London. The last thing that I want to be doing, is either cancelling that or going up on stage and just feeling super self-conscious because, my nose is running or I'm coughing everywhere. So I'm happy about that. But that does mean I've got an early start in the morning. I'll be getting up in about 12 hours to go and get the train. Need to get down to London as early as possible. And I'm representing Darwinex on a panel about broker growth, which will be interesting because we're not just a broker to the point where we're probably not even a broker by definition. I mean, we have the licenses and we operate as a broker, but there's so much to Darwinex that saying it's a broker kind of doesn't really give it justice. But a lot has happened over the past couple of weeks. There's been some updates to Darwinex, which is great. For example, today we've released this new UI. The full functionality of it isn't released yet. The end goal will be so that you can see multiple Darwins in one login. As of right now, if you have a classic Darwin, i.e. on Darwinex Exchange, and you have a zero Darwin, like this one here, you would be able to see them both in the same list and therefore see them in the same UI. That's the current state. In an ideal world, which I think we'll be moving toward, is being able to have multiple Darwins under one username /login. How long it's going to take to implement that, I'm not sure. But I know that's kind of where we're heading with this sort of thing. Last week, wild week for crypto. The purple lines show this week, the previous week's high and low. So you can see the move to the downside was insane, 96K all the way down to 80. I find it really difficult to get involved in crypto these days because I think was it 2016 or 2017? I mean, my feed doesn't even go that far back, but we're talking like Bitcoin was about 3-4K at the time. And now when I see it drop from even from what was it at the peak, 126 all the way down to 80, I'm like, yeah, it's still not come back enough. Like it's really difficult to like see that price of even 80,000 and perceive it as a good price when you've known it so low. Like it's a really difficult one. Maybe perhaps if I spent more time, in the crypto market per se and analyzing price, maybe I would feel like it was short term at least a better price. But this this looks like a serious blow off top for me. I think we've got this area here, these couple of lows. If we struggle to reclaim that, then I think it's night for a bit. Not forever, of course, but something like and bearing in mind I'm not trading this, so this is just theory, right, about what I would like to see. and then coming back into this area down here. So we'll just mark that out. It's quite a bit, like quite a decent area there. We've got this low over here, and we've got these prior highs. That's where I'd start to get interested. How we doing, LeBron? How we doing? That's where I would start to get interested as a speculator, somebody who I don't have much crypto exposure these days for various reasons, but that's where I would start to get excited again. I don't feel, and again, I've been active in the crypto space for many years, and even with the drop that's happened now, which is, let's take a look, from peak to trough, 36%. It wasn't max pain. Like it didn't feel like people were truly hurting. Like you go on Twitter or something or YouTube and people are talking about it. Like it's you know, it's a key topic of conversation, right? But nobody's like hurt by that. And when you find, as sad as it sounds and as kind of brutal as it is, when people are hurting, that's generally when it's better to step in as kind of a smarter investor, I guess. How are we doing, Gabs? What are you doing? I'm just taking a look at the Bitcoin chart at the moment. I hope you're all good. This to me is max pain. This kind of extended every time we try and rally, just gets thumped back down. Try and rally, thumps back down. Appreciate that, Gabs. Appreciate that massively. That to me feels like max pain, and we haven't had that yet. Like if we take a look at this, feels very similar to this. Whether it behaves the same, I don't know. But then afterwards, like I say, every time price tries to get somewhere, it just gets thumped down, thumped down, thumped down until we have this kind of this area here, which again, in hindsight, kind of, I mean, you can't call it at the time, but with hindsight, we can see that this was the end of that bearish run, right? Am I expecting the same? To be honest, I don't really care. Like I say, it is what it is. I'm super agnostic about this, but that is the kind of thing that I would like to see before starting to get involved in crypto. Something like this. Sponge gaming, what are you doing? I feel like that's defo a spam comment in it. Nushaw Pachonka. If I didn't know any better, I would say that was tail, but I don't know. It says, "Hey, handsome." That to me says it's tail, but I'm not gonna go out on a limb and say that. So yeah, that's my kind of idea. Why is my name so weird? Yeah, that's strange. Why is your name so weird? I knew it was you straight away, but that's odd. Maybe I don't know. Maybe you've changed. Everybody's name seems different today. It's weird. Rob's is different as well, unless you've all been out there changing. I mean, I've been gone for a week, right? And I come back, everybody's changed their names. Speaking of XAQP, all-time highs today, just 133.81. Took a loss on the DAX since then, but trading at all-time highs, 95 at 9274. That's gone up as well this week. So been quite a few people get promoted to silver from the calibration phase this week, which is fantastic to see. And then after this, after we close at the end of November, it's one more month until XAQP is in DarwinIA Gold, which I don't know who will be more excited for that, myself or Tail, but I can tell you I am damn excited for that. Because I always say, right, who am I to come on here and do a live session where we, talk about trading and we talk about markets and we talk about building records and developing your strategies? Who am I to do that if I can't do it myself, right? And when I'm in DarwinIA Gold, it kind of eliminates any question of, okay, should I listen to this guy? Does he know what he's talking about? Because you can see categorically there is my evidence of doing it, which is what I'm most excited for. Put the money, the progress aside. Like that's what I'm truly excited for, being able to talk to you guys on a level. So there's been times in the past where I'll be talking to somebody who is in DarwinIA Gold and I'm like, damn, if only I had what you had. And now I get to kind of join that club, which is going to be awesome to do. And Tail, I hope you're still cracking on too. Let's take a look. XXBI. Yeah, so we're XXBI still in position to move to gold in February. That'd be February, won't it? and then WXBY. WXBY just under, so you need just over 1% by time, yeah, same as me, by January. So you need to make like 1.2% in December, maybe 1.3% in December. It says you're excluded at the moment. You're correlated with XXBI. So both your strategies are trading the same thing, basically. Let's take a look. What's it doing? Correlation. Yeah, 0.95. I mean, I think we had a conversation about this before, didn't we? Right, where you said that you wasn't trading the exact same things on both of the Darwins. I mean, it doesn't even look that similar on the 6 month. If we take a look at the 3 month, it probably looks a little bit. Even the 3 month isn't too bad, but that 1 month, yeah, it's heavily correlated. I mean, that's not going to be an issue soon because WXBY should be going into gold in January. So, I mean, at that point, I don't think you'll be too correlated with XXBI, but I don't know. We'll see. We'll see. But yeah, that was it's been a bit of a weird couple of months because the start of each month has started, and I think I've spoken about this quite a few times, right? The start of the month has been awful for me, and it kind of, I know back when I was trading with the discretionary approach, that would play so much on my mind that I would let that roll into the next week and into the next week and into the next week. And I always felt like if I didn't have a strong start to the week, or if I didn't have a strong start to the month, or even a strong start to the day, I would let myself not spiral necessarily, but I would keep myself in that sort of headspace, right? Whereas now I'm kind of, I just feel like it's okay to let it do what it's got to do, and being able to kind of understand that my systems are out there hedging each other. So, for example, today, what I mean by that is, so let's get today. So this is today's. These are today's trades. So I woke up this morning and I had these two positions on gold. I did close them down. If we can see them. So I close them here. Price is pretty much the exact same price right now. I do manually. You should be able to view the video in whatchamacallit, a different mode as well. You can, let me see if I can grab the link for you. Sorry about that, guys. I can post the. I've just posted it in the comments. That is the non-vertical mode. It's StreamYard's had this weird update where it streams them in both perspectives now, which is I don't know why it does that. I suppose so it's easier to view on mobile rather than it being a really small screen. But it confused me with the links. Yeah, I mean, it's pitch black here. I don't know what she's seen outside, but she's gone back to guard the house as always. But anyway, so I knew that this morning I was, $100 up anyway, so I had $100 to play with for the day. You see my face better now. I only just realized there's a little mobile icon next to your comments if you're viewing on your phone. Yeah, we do have almost the same return. We'll compare Darwin's in a moment. So I knew that I had $100 to play with, and then this is a fairly active day for me. I really don't get involved this much, to be honest. And then it traded an inside bar on the daily on dollar yen and on euro dollar. And then I had another short on dollar yen, which again I closed down here. Like I say, or I was saying, I do manually intervene in my trades occasionally, usually when I have more exposure. So again, like I say, this was quite an active day for me. And so I was happy to shave off some of that exposure. And then I ended up taking this loss on the DAX, which was super frustrating because if you go on the 1 minute, it was trading a breakout. It was in profit slightly, like barely, go for a 2R. So target was up here somewhere. and then it absolutely caked it right down to my stop, and then completely did a reverse. And it did this on the Nasdaq the other day. I've had this happen a couple of times to me over the past week. I think this was on Friday that the Nasdaq did it. The Nasdaq was even worse, right? This was a disgusting trade. Where are we? 21st of November. Here. So I was short on the Nasdaq. Oh God, I was short on the Nasdaq there. Again, tiny bit of profit. This is the problem with breakout strategies. This can happen. Ran to my stop to the absolute point, and then did an Uno reverso, ran straight to target. It's happened to me a couple of times. I don't know. It's indices. They're not my favorite market to trade. I trade them because, to be completely honest, breakouts are pretty decent on them. Not that all of my strategies are breakout strategies. They're not, but I do have quite a few. I'm currently testing some new strategies that I've made, but I haven't come across anything decent recently. It's been a few weeks since I've been able to put together a good system that's passes all of my robustness testing, performance testing, all of that sort of stuff. So I'll carry on trying to find some good strategies, but it's been difficult recently. Ada Joseph, hello Kieran, long time, hope you're good. I am very, very well, my friend. I hope you are too. It has been a long time. Marto P, trades, how many strategies do you have running? Currently 27, I believe. I did have 28, but then I removed a Nasdaq strategy last week. I had a Nasdaq strategy. I'll show you. It was, I mean, it's okay as part of a portfolio. Where is it? It's okay as part of a portfolio. This is the equity curve. It has like a 94% win rate almost. The problem was when the losses come, they're absolutely huge. And it got long on the Nasdaq last week, I believe, on Monday. So it only trades on a Monday. It got long on the Nasdaq, started to go into drawdown, and it made me realize, actually, okay, and this was a strategy that I've only recently implemented, and it made me realize that I just didn't want to see that volatility in my equity curve at the portfolio level. Bearing in mind the majority of my winning trades are like $40 or $50 at master level. Of course, my Darwin is higher, and the loss on this would have been like minus 700. So even my portfolio curve would have looked like this, just a huge drop off. So I decided to close out of that trade with, I think it was minus 150. I'll bring it over and I'll show you full transparency. All history. Been a decent run recently. Where is it? Is this it? Yeah. So buy Nasdaq, minus $139. So that was like, I don't know, 20% of the way to stop. But I just thought I'm not taking that risk, because if it hits a full stop out, I just didn't want to see that on my curve. Next day, I had a trade on the DAX, which made up for it anyway. So I felt a lot better after that. But it is what it is. You know, XAQP is a living, breathing portfolio. I am not perfect. I am not the best trader in the world. I don't claim to be. I am still very much learning. I mean, for those of you that haven't seen, I had my I've started my IMC qualification. So these got delivered earlier today. I mean, I don't know if you can see. Can you tell the size of these compared to my head? Like, these are the 2 books that I've got to basically ingest, and then how thick they are as well. Like, just absolutely packed with information. If we, like, and the text is all like this as well. Don't know if you can see. So I need to spend a good few months going over that stuff. But my point being is, and I'm doing that as like optional, right? I want to. My head is massive. Is the point is, I want to learn this stuff, because I feel like now, and perhaps it's a bit of imposter syndrome, right? And I think we all get that as traders, or especially when you're having success as a trader, we all get imposter syndrome. I don't care how big you are, how big your ego is. You know, even if you've been a successful trader for many years, if you go work at a prop desk and there's guys at the prop desk who are doing, you know, 250 grand a week, they're going to make you feel small, and it's going to humble you and make you realize there's so much left to learn, sort of thing. And so I'm at a point now where I'm like, I want to absorb as much information as possible, because I have something that, you know, is interesting not only to me but to external parties, you know, whether it's an investor or a fund, whoever it may be. But I want the knowledge, the experience, and I guess the professionalism that they would expect from a trader with a record that hopefully, you know, mine will satisfy or be good enough for. Your head is massive. That crease, isn't it? But yeah, that was a roundabout way to tell you, Marto P Trades, that I have 27 systems now running on XAQP. I also have less running on LVFZ, and there is a high correlation because there's some strategies that are some XAQP strategies also running on LVFZ. So there is a high correlation between those two. But this is my test, Darwin. So this is where I will move strategies to test before putting them on XAQP. So it's kind of like my playground for systems. I also used to have I still have BYXB, which is it's mainly a carry trade portfolio these days. So I got burnt by the whole grid risk engine fight, right? Which I was open about since the beginning. I always said this could happen. This was a test, I guess, of can I beat the risk engine in a way. So this takes all of XAQP's trades, and it also has a grid system trading FX pairs, basically trading in positive swap territory. So this is the MetaTrader account for it. Take a look. So the balance is at 116, 113. I think the max drawdown for this account is like $5,000. So it is a lot higher risk, specifically because of the grid element. So it's grid trading FX pairs without a stop, churning the positive swaps. So it is far higher risk, right? I'm not stupid. I understand that, and I would never offer that out to third party capital. It's purely for my own records and for my own trading. But my main portfolio is XAQP, of course, and then my testing ground is LVFZ. If anybody's interested in, because I know that people watch XAQP, I get questions on it all the time. But yeah, maybe I'll publicize LVFZ a little bit more, especially if I'm putting new strategies on there. User Legend AKYT, how we doing? I always forget you're Tan, right? I always forget I think you're Tan. I could be completely wrong, and in that case, I've just called you a completely different name, so I apologize, but I'm sure you're Tan. Could you explain the new feature, please? Tail, I did this at the beginning, dude. I'm joking. So this is the initial release. If you have a Darwin on Darwinex exchange, you will also be able to see that here. So you can see your classic Darwins and your zero Darwins. I think the idea will be to move towards kind of a multi-login system where you can see all of your Darwins. So for example, I would be able to see XAQP, LVFZ, and BYXB. You would be able to see XXBI and WXBY. Whether that comes in the immediate term or whether that's a little bit of a more longer term development, I'm not sure. But I think that's where we're going with it. So you can just seamlessly swap between your accounts, which will be phenomenal, because I have to log out and log in if I want to see my performance fees on LVFZ, for example, or if I want to do a little bit of a deep dive into that. It's also I got a performance fee coming for XAQP on the 2nd of December. Now this is I think I've got about 4K pending right now. So 4,050 euros in fees will be coming on the 2nd of December. I just know this is what happened last time, right? I think I had on my first performance fee, I had about $700, and it was the final day before I got paid, and I took a few losses, and I ended up with 188 euros. So I'm just hoping that doesn't tank by a grand, because that's paid for my IMC qualification. So yeah, I've already spent a grand of that. And then the the remaining 3,000, what I'm going to do, and this isn't advice to anybody, but it's what I'm going to do, because again, I've had this conversation with quite a few people recently. I know I was talking to Rob about this the other day. I actually, for the guys here that know Rob, I actually met him for a coffee last week because, funnily enough, he only lives, half an hour to 45 minutes down the road from me. So we met up and had a coffee. And I was saying that I'm going to reinvest the remaining 3,000 into XAQP in January when it's open to investors. But what I'm going to do is, and again, this is where no financial advice, trading carries risk and all the rest of the disclaimers that come into it, is I'm going to leverage it up by 3 times. So essentially that 3K investment will be like a 9K investment. Now, of course, if I go on for a 10% drawdown at the beginning of next year, I will experience a 30% drawdown on that 3K. So of course it carries like a much higher risk, but equally, if I do a 33% return, that's a 99% return, right? And that's a risk I'm happy to take because it's all performance fees. So it's kind of it's kind of not free money because it's earned money, but it feels like free money. So I don't mind treating it with a little bit of a higher risk. And somebody asked me, I think we spoke about this a couple of weeks ago on a live stream, and somebody did ask me, why would I not purchase a booster or an allocation with that instead of investing it? And the top and bottom of it is, it's just my preference. I would rather keep that cash, invest it, experience the P&L swings in it anyway. Like I'm not too bothered, but personally, I'm working towards investor capital. I'm not bothered in permanent allocations or boosters. They're fantastic products and you can add them if you wish, but I've always been, okay, I'll get 8 months record, get open to investors, and that's where I'll see the growth. And that's just a personal preference. Whereas I know a lot of people would rather have an allocation from day one so that they feel motivated to build their record. Whereas I don't feel that need. So yeah, please bring Darwinex in Tanzania. How could I not say that then? I'll take a look. I'll see why we don't have it. I'll see why we don't offer it there. The most of the time, if you're talking about Darwinex specifically, most of the time it's due to regulatory restrictions that we have. If you're talking about zero, it's usually payment provider issues. So if we can't guarantee that we can get performance fees paid to you, then we won't offer to services to your country. It's as simple as that, because the last thing that we want is to be able to take payments but not make payments. With Spain being in Europe, it can get quite sticky. So yeah, I just seen Tal's comment about my head being massive again, so I think we'll move on from that. BT Capital, how we doing, my friend? Hope you're all good. PWBV, I've seen that today already. I'll take a look at that in a second. Do an FAQ on XAQP on your YouTube. I could do I could do the. I don't know what I would do an FAQ on. I can't do an FAQ on the strategies specifically. I'm in a conversation at the moment with a fund who are going to put me on trial, but they will want exclusivity rights down the line. So I've sort of said to them, I would only ever sign an exclusivity agreement. And this is a bit of advice for anybody as well. If you're ever talking with a fund or a desk who are looking to back you, and you know that your capacity, might be 10 mil, 50 mil, 100 mil, however much it is. If they want you to sign exclusivity, make sure that they sign an agreement or a commitment to fill your capacity, or at least fill it within a certain percentage, which is one of the agreements that I've made recently with them. I said, in the future, we're not doing any exclusivity agreement as of yet, but I've said, to sign an exclusivity agreement, I will need you to sign a commitment to fill my capacity, which I think at the minute is 30 million. At least on 3x. If you do it on 2x, it's slightly higher, probably about 50 million. But I will only sign exclusivity if you agree to fill that capacity within, a 2 to 3 year period. Otherwise, I'll just raise capital from, other vendors, sort of thing. So yeah, I'm a little bit funny about going too depth into strategies and stuff, just in case one day it hinders me on an agreement I have with a fund or a desk who agree to back me, but they're like, oh, everybody knows everything about your portfolio. I'm not sure if that's what you had in mind anyway. GEQ0 and OZVB. You got more Darwins? Tail, dude, man's going through them like no man's business. What's the margin on Darwinex? I'm testing a strategy, but already hit margin call. It depends on the asset that you're trading. We've got a list on the website. I think it's still on the website. It shows you all the leverage that you have and therefore the margin requirements. Yeah. So DarwinX0.com/assets, and it will tell you everything specific to that asset. So you can see it shows you the FX, the indices, commodities, and then your different account types as well. So I'd go through there because it depends on what asset you're trading. Johnny Loxwood, how we doing, my friend? If your Darwin is eventually open to investors, is it allowable that I can promote the Darwin on social media? Unfortunately not. So this is where, well, it depends where you are in the world, right? So for me, again, one of the reasons why I'm doing my qualifications now is I mean, I personally have a really good network of investors, and I know I can raise capital. I've done it before my time at Darwinex, so I know that I have the network to do that. But am I allowed to do it? Strictly speaking, no. You can talk. So like word of mouth is okay because the FCA can't police that, so it's in their guidelines that word of mouth advertising or word of mouth promotion doesn't come under their scope of what they look for in terms of financial promotions, unless there's something written where, you know, you might have said to somebody, I'll give you 10,000% each year, blah, blah, blah. And then, you know, they send you an email just to confirm you said this. And, you know, but in terms of promoting on social media, you can talk about it. You can add risk disclaimers, but you can't use like leading statements or use CTAs. So you can't talk about your investment product and then be like, you know, if you wanted to check it out and take a look, or if you wanted to invest, check here, or and provide a link, because then you're basically leading leading a horse to water or leading a duck to water? I'm sure it's leading a horse to water. And that would be considered or classed as a financial promotion. Now that's in the UK with the FCA being the regulatory body or regulatory oversight. It differs per region, but even if you're outside of the UK and you're offering to UK clients, you still come under the FCA's guidelines. So I think that rule pretty much sticks anywhere with any regulator that you're looking for, bound by. So yeah, it's a bit of a sticky one. You can talk about it, just don't lead the horse to water. You know, talk about it, gauge interest, have face-to-face meetings perhaps, or do the stupidly hard thing that I'm doing and get your qualifications, because that way I think to get authority or to become licensed by the FCA, you have to complete this, which for those of you that weren't in the call, I was showing this earlier, or I showed my learning materials. This is for the IMC, which is the investment management certificate. That combined with a CFA level 1 or level 2, I think it's the CFA level 2 plus the IMC, is kind of entry level to become authorized by the FCA for financial or investment management. At that point, you would have to be granted a marketing license to be able to promote your services. There's like, it's so complex, but I understand why, because there's that, you know, imagine if there wasn't, right? Imagine how many scams there would be running amok. I mean, you've only got to look at crypto to see that. I'm having problems with NINO for getting the investment account. Yeah, I remember you saying, Rob, I think the best thing to do would be to speak to the Darwinex team. So info@darwinx.com. I don't usually deal with that sort of thing. But you know, they deal with it on a daily basis. So I would send them a message. Yeah, and just explain the situation that you have right now. I think your leverage is like what, 1.5x or 1 to 1.5 or something like that. So yeah, speak to them, see what they say. Risk 1%, would it show up as 3K in the investor capital or the leverage 9K? It would show up as 9K. So if I put 3K in, but I leveraged it up 3 times, it would show as 9K, because technically the AUM that I would be managing as the trader would be 9K. I'd be getting paid based off of 9K investment. The problem, it's not the problem, but the thing is, for me as the investor, is these figures would basically be 3x. But because we're talking about, I mean, it's all relative, right? And I don't mean this to sound arrogant or anything like that, but 3K, it's a fairly small figure for an investment. So I'm happy to leverage that up and kind of take that additional risk. I wouldn't necessarily do that into every Darwin I invested into. I kind of feel like if I know the person, it's a little bit easier to do that. But because it's an investment into myself, I don't really care. I'm happy to take that risk. I've got a couple of other Darwins that I've got my eye on. But the great thing about investing into your own Darwin is you keep the investor share and the trader share. The only thing that you lose is the 5% to Darwinex, but hey ho, they allow me to leverage up by 3 times, which I wouldn't be able to do elsewhere. So yeah, it would show up as 9K. BWOV. I'm presuming that you're sticking a Darwin in. I'll be doing a Darwin analysis on Thursday. Again, now that we've got most people in, or the majority, more people in the call, I'm struggling to get my words out tonight. I'm a little bit rusty. I'm down in London tomorrow for the Finance Magnets event. I'm speaking for Darwinex at like 20 to 11 in the morning, I think. So I'm traveling down first thing in the morning, spending the day in London, coming back late on the evening. So I won't be streaming tomorrow, but I'll be back on Thursday and potentially Friday as well. I might do a Friday stream. Might throw a curveball in there. I don't think I'm busy on Friday. Let's take a look at my calendar. Google Calendar. Wrong one. You're probably just seeing like all 10 of my personal emails. Okay, yeah. I think I'm pretty free on Friday. We've got a business update first thing in the morning. Other than that, I think I'm pretty free. I should have been in Madrid on Friday, but because I'm going to London this week, obviously I've got 2 kids, right? You know, I don't want to be leaving the missus with the kids all week. I was invited down to Finance Magnets today and Thursday, but it's just it's too much. It's not, you know, maybe if we had a booth at the event, I'd go down for the full 3 days, but just it's enough for me to go down for the one night. Tal said also, Mr. XAQP. I feel like I completely lost track then. Oh, I was talking about doing a stream on Friday. We'll see. We'll see how much I have on Friday. But if I can, I'll try and squeeze in another session because I'm conscious we didn't do any last week. Tal said, Mr. XAQP, if someone invests 1K into you, how does it work? If you make 5% a month with the Darwin risk engine, if you would have 3.33, is that 15% for both? That does not make sense whatsoever. If someone invests 1K into you, how does it work if you make 5% a month with the Darwin risk engine? If you would have 3.33, is that 15%? Yeah, you're gonna have to reword that question, dude. I don't even think ChatGPT could decipher that. Johnny Lockswood, UK, yeah, suspected that would be the case. Yeah, I mean, there's a lot of documentation released by the FCA. I'll see if you're interested. Send me a direct message on Discord, Twitter, whichever platform that you can. I can see you're watching on YouTube. I'm not sure which YouTube channel you're watching on. But if you can either jump into the Discord or send me a message on LinkedIn, Twitter, or anything like that, I'll see if I can dig up the FCA guideline booklet that I read. I think it was probably about a year ago now. But it covers things like copy trading, investment management, portfolio management, stuff for influencers and stuff. It's about 50 pages, but it covers all of this sort of stuff. It's good to know because people. This is one of the issues that I have. One of the issues that I have with this industry is the professionalism is a little bit lost, in my opinion. So when we have brokers offering 500 to 1 or 1,000 to 1 leverage, you know, deposit $100 and we'll give you $300 to trade with, and all this sort of stuff. Or even, you know, funding companies coming out with an $8 challenge for 2K funded account. And they put the barrier to entry so low. And I'm not arguing with that. I don't think that's the issue here. But they put the barrier to entry so low that you just get an influx of people who have zero knowledge on the industry, zero knowledge of risk, zero understanding of what's happening. And they end up being the voice of the community, right? Or the voice of, I don't know how to word it, but ultimately they're going to be the ones that get hurt, and they're the ones who need the most protection. And you kind of forget that if you've been doing this for a few years and you know quite a bit, you forget, you kind of take that for granted, right? And you forget how easy it is for somebody to fall victim to a scam just because they don't understand anything about this. Like, the easiest example, I know it's the most cliche, but why would that guy, living in Miami with 5 Lamborghinis and a Bugatti, be lying to me? You know, he's selling me his trading signals for $100 a month. Why would he be lying? What's he got to gain from me? He already drives a Lamborghini, not realizing that the signals paid for the Lamborghini, right? And they see that as trading. And when you read the guidelines from regulators, you understand how dire things are and how many people put their foot in it day in, day out, not even realizing that they're basically not screwing people over, but basically going against every regulator that governs the financial markets. I had a conversation with one of my friends when I read there was two booklets. I can't remember what the first one was called, but the second one was called what was it now? The FCA's guidelines for finfluencers or something like that. And again, it was a massive document, multiple pages, and it was talking about trading influencers. And it was going as far as like a YouTuber who's not even monetizing their channel, as in not taking sponsorships or partnerships or anything like that. But if they spoke about a brand, they could be liable for, being penalized, whether it was a fine or jail time or so. And I spoke to a friend of mine who has a YouTube channel, and I think I scared him a little bit, and he spent like the whole week going through all of his videos and removing things that he'd said and things that he'd, put in his bio, like the way things were worded, for example. Something that springs to mind as an example is if you're talking about your assets. So, for example, if I said about XAQP and I said, we're up 2.42% for the month. Fantastic. I can't leave it there. I have to say the year-to-date return. So I would have to say we're up 2.42% for November, bringing the year-to-date return to 33.49%, because they want you to provide the context behind things. And then you have to have the obvious risk disclaimers. But again, it's like, I'll give you an example, and this goes back to the question about promoting via social media. So let's go. If I was going to write this tweet, in fact, let's just says, oh, sugar. Definitely did not mean to do that. So you can see on Twitter right now, I've got 16 characters left, 4 characters right. So I'm over the character limit now for a post on Twitter. So what it'll do from here forward, it will just say ... show more. If then I go, capital is at risk, past performance, yada, yada, yada. If I still put my risk disclaimer here, but it's outside of the original post, so you have to click show more to see the risk disclaimer, that is a breach of, I don't know, how's I going to word that? A breach of, it's against guidelines, basically. And you can get, as a company, you can get done for that. Your risk disclaimer has to be within the viewable or instant viewable post. So it would have to be, 2 seconds. So you would have to have the risk disclaimer so that if somebody's scrolling like this, If somebody's scrolling like this, it has to be viewable in the post. Then it has to be viewable on the image. So if you're sharing an image, it has to be viewable. So if we take a look at Darwinex, here we go. Media. It has to be viewable on the image as well. Okay, so here, this is actually a perfect example. So this is a post that I wrote, when was this? November 12th, so a couple of weeks ago. So you can see we've got the, well, a little bit of information. We have the total return and the year-to-date return. Okay, fine, because I'm not talking about a week in isolation, a day in isolation, or a month in isolation. And then I have the risk disclaimer pre-show more. So this is before the post cuts off, so there's no character limit. This is all hidden. This is what I would want to be at the beginning of the post, but unfortunately, because of regulation, I cannot do that, and it's not worth the risk of putting that first and having the disclaimer outside of the show more. We're on a good page with the FCA. I don't want that to change. Then you have to have this. So you have to have the risk disclaimer in the image, and you have to have it, I think you have to have it a certain size. So this is probably actually a bad example, because the big thing here is the 8 million AUM. The fact that this is so much smaller than that is probably not great. However, it's big enough to view. What they don't want is something like, let's just say this, Epic Pen. Let's say this was a financial promotion, which it's not. There's no CTA to anything. We're talking about the traders. We're not talking about the investment vehicle. Where's my pen? Come on, Epic Pen. Let's load. Let's load. Oh, it already is loaded. That's my bad. Let's say we had a tiny little risk disclaimer here, and it said past performance is not indicative of future results, capital at risk, something like that. That is considered not having a risk disclaimer. It's as simple as that. So it has to be like, it would have to be roughly the same size text as this, or maybe this. It could be a little bit smaller, but it can't be a massive difference from all the other text on the screen. Basically, what they don't want you to do is the psychology of colors and font sizing and all that sort of stuff is people to see all of this because it's big, it's bold, it's out there, there's all these colors, and go, oh, great, that's fantastic. It's easy to look between all of those. And then, like I say, maybe you've got a paragraph of disclaimers down here, right? But nobody's ever going to read those, right? It's kind of like do you remember the typical, Jack, how we doing? Hope you're all good, my friend. For the guys who are, I don't know what age, I guess over the age of 20, maybe 22, 23, you'll remember the old kids adverts on like kids shows on the TV, where it's they'll be advertising some random toy, like the most random toy you can think of, and at the end there'd be like a 20-second disclaimer where it's like, I don't know, this toy might catch fire and you can't sue us, blah 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 blah. And it's like, oh my god, there's so much information for you to take in, but you can't. So you just tune out. You just don't listen. Like something not included, not included, and it's kind of the same thing. But obviously, when we're talking about finance and we're talking about investments, the rules are so much more strict, and rightly so, because in general, and a friend of mine, if you don't know him, I highly recommend you following him. Think. A friend of mine, David Bell, talks about this a lot, especially Brits have zero knowledge of investing. There's zero knowledge of being able to invest, put their money to work. Everybody is taught to save. And it creates this kind of environment where people just have a lack of understanding of how to invest, so they're easily duped, right? If you've been taught to save your whole life, you know, and you get 3%, 4%, 5% a year in your bank, and then somebody comes along and goes, oh, guess what, I can double that tomorrow, I can double it the next day, I can double it the next day, and then they might do it once or twice, and you go, oh wow, what have I been doing for the past 20 years? This person's just doubled my money. You have no idea the risk that's going on behind the scenes to do that. And therefore, these people are very, very easily duped. And I I was one of them years ago, and the majority of people are. So anyway, a little bit off topic there, but I think it's important nonetheless. I mean, it was a question about regulation, and regulation is a massive. It's just a huge thing, and it's if you want to become a professional asset manager, somebody who treats this like as a career and not just a trading hobbyist, you have to understand the regulation side of this industry. So there's no two ways about it. If you want to be the man or the woman, if you want to be that person who is catapulting through a career of trading and finance, you have to know the risks, from a regulator's perspective, or from a regulation perspective, I should say. This industry goes so much deeper than just buying a prop firm challenge and trading it and trying to make a payout. I get so wound up, like genuinely wound up scrolling through. I mean, I barely ever do it, but scrolling through Twitter, YouTube, Instagram, TikTok, and seeing podcasts and interviews with traders who've just passed their first funded account and taken a payout of $1,000, and they're giving advice on psychology and how trading's changed their life. And I'm happy for you. I genuinely am, right? I'm not saying, I'm not being bitter, and I'm not saying that I'm not happy for these people, but they are at the very, very tip of the iceberg of what trading is, and they have so much to learn. There's I won't mention names, but I saw an interview recently with a guy, and obviously he's an educator, right? So he's a trader. He's made some money with prop firms. Fair play to him. Like, more power to you. Now he's an educator, and I keep seeing clips of this guy, and everything he says is just either factually incorrect, or it sounds good in theory, but in practice is horrible. And you can just tell these people have zero knowledge of anything finance outside of prop firms, and yet they're the ones with the biggest voice and the biggest following. And it's just, it really grinds my gears, because there's so much to learn, and so much to build in. Yeah, Rob said it right. Most people talk a load of bollocks, and it's true. People, again, this industry goes so much further than prop firms, even Darwinex, right? The industry is so big. There's a reason why fintech finance is so big. Well, if we take a look at like pension funds, mutual funds, all this sort of stuff, they are the biggest industry in the world, or biggest, or part of the biggest industry in the world. And there's a reason for that. And you think that 100K account at a prop firm is kind of like as far as you're going to go in your career? I mean, I guess it is, if that's all you want it to be. This is why I don't like prop firms for new traders, because it can skew your vision of what's actually important. But the scale that you can go to in this game is incredible. You just have to know where to go, what to look at, and kind of who to be around. And like I say, even I opened that IMC book earlier. I'd like to think that I know a fair bit about the industry. I've been trading for 7 years. I've worked for Darwinex for 2.5 years. Like, I've done a lot from the back end to the front end. I speak to a lot of people. I speak to prime brokers, liquidity providers, other brokers, dealing desks. I speak to so many different people. And yet I opened the book, my IMC book, and within 2 minutes, I was like, oh my God, I know nothing. I know nothing. I did the other day. I've been waiting for this learning material to come, and so I spoke to ChatGPT, as you do, and I just said, I want to know what level I'm at and what level I need to be at to be able to pass the IMC qualification. I don't think it's too difficult. It's just a game of memory, right? You have to memorize key things and understand like little niche details. And it gave me a brief 15 questions. And it wasn't questions that would be in the exam. Okay, so I've got to sit 2 exams. It wasn't questions that would be in the exam, but it was questions about the topics and where my knowledge is for topics that will be in the exam. I answered 4 questions out of 15. I work in the industry. I've been here for years and years. It's not like I'm some newbie. I answered 4 questions out of 15. And even those 4, I was like, there was 1 or 2 where I was like, I know the answer, absolutely. The other 2 was like, I kind of know what I'm talking about, but I don't know how to word it. The rest, I was like, I don't know what the acronym means, so I can't even answer that. Or I don't know what that concept is. I don't know what that means. And I was like, instantly got deflated because I was like, I thought I was so much further ahead in terms of my knowledge. And it was a truly humbling experience. So I've been waiting all week eagerly for these books to arrive just so that I can learn, because I'm one of those people, and I did it with XAQP, right? I had no idea about systematic trading, no idea about building a multi-strat portfolio until I started with XAQP. I'm a very, very quick learner, not to toot my own horn. I'm a very, very quick learner, and I get obsessed with things. And so I have to, like, if I don't know the answer, I have to find the answer out. So I've been waiting by the front door for some, like, the postman must think I'm such a weirdo because, like, I'm right there. Bearing in mind I live in a 3-story house. They knock the door. I'm at the other side of the door already. And I'm like, give me my books, because I need to know. I need to be able to answer the 15 questions. I can't just answer 4. I need to be able to answer the 15. But moral of the story is, like I say, I've been around for what feels like a long time. I think 7 years is I'm still a baby in the industry, but I've worked a couple of different companies and at Darwinex for a long time now, and I still am scratching the tip of the iceberg. So I guess the key message for today, because we're going to call it an end to the session there. I've rambled on for quite enough today. The key lesson or the key takeaway is always stay malleable and always stay ready to learn. Because if you think that you've reached the peak in your career as a trader, you have. If you don't think that you've reached your peak in your career as a trader, you also haven't. Or no, I've just messed that up big time. There's a quote like that that's quite famous. I can't remember exactly how it goes. But if you think you've reached your peak as a trader, you absolutely have, and you won't go any further. And if you believe there's more, you're absolutely right, and there is more. It's just about, are you willing to put in the work now that's going to level you up from just this retail trader who, sits at home, sort of like me, doing his own thing, to the next level where you can start, having high level conversations with people, get capital allocated to you, work with investors, work with, LPs and PBs and stuff to provide asset management services in the future if you manage to get your qualifications and get regulated. But there's so much. there's so much that you have to learn and do. Just be open to that. The end goal shouldn't be getting a payout from a prop firm. The goal should never be a payout or a performance fee or money in your back pocket. That should be a byproduct of the journey, right? There should always be money coming your way if you're doing the right things. If your goal is, I want to get a performance fee or a payout from this prop firm, then you're limiting yourself so much. That's a byproduct of it. Focus on the things, focus on the growth, and get into that next level, and the money will come. If you're doing the right things in this game, the money will come. Retail, there's tons more. Most of us will never reach 100%, dude. 100%. But for everybody who doesn't reach it, there's always the one that does. Just make sure you're that one person. Put the work in that everybody else isn't willing to do. Rob said he's put up with my voice, mate. Got no problem there. Well, on that note, bear in mind, I'm never coming for a coffee with you again, dude. If that's the way you feel. I'm only joking, of course I will. But it's been good to be back. It's been good to just have a bit of a ramble and go through some trading musings. Like I say, tomorrow I'm at Finance Magnets all day, which means I probably won't be very active in the Discord or on social media. Which is kind of, perhaps I'll bring this up on Thursday. But I think people think that I'm a support agent, and I'm absolutely not. So if you're messaging me on Discord about a support query, I'm always happy to help. It might take me a few days, but please understand that's not my job. So I won't be, straight away getting back to you and fixing your issues instantly. I have to liaise with different teams. And that's why I always say to people, like, if you have an issue, go to the actual support team, because I can't help you there. But I think I'll do a proper kind of discussion on that on Thursday, because it's important, because it's happened quite a lot over the past couple of weeks. And so, yeah, guys, I'm going to love you and leave you. I meant it in a good way. You best of. Yeah, I'm going to love you and leave you here, guys. My kids are about to get home and the house is going to be carnage. The dog will obviously kick off as soon as the kids get back as well, because she'll be excited to see them. So I will be back on Thursday at 4 p.m. UK time. As I said, again, sorry to keep rambling and saying the same thing over and over again, but I won't be here tomorrow. I'm at the Finance Magnets event. If you are at the Finance Magnets event, I'm speaking at 20 to 11. So you feel free to come and watch me talk on a panel about broker growth. And then I'm just going to be wandering around for the rest of the event. So if you want to grab a coffee or just have a chat, I'm more than welcome. I'm more than happy to put some time aside and just have a chat with any of you guys. So we're going to I've just completely lost track. 6 o'clock here now. This is where I always hit my wall. About 5:30, 6 o'clock, I always hit my wall. But I'm going to love you and leave you all here. If you're watching this live, what's that say? I don't know. If you're watching this live, I just want to say thank you all for joining and being here with me and putting comments in the comment section. And my mind's gone. This is what happens when you have a week off streaming. You just forget how to do it. I just completely lost. Maybe we'll just stream for the rest of the night. Maybe I just won't turn it off. But no. Anyway, I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. And I will see you guys on Thursday. Have a great trading week, and let's all close November out strong. How many days left? Like 3 days? 1, 2, 3. 3 trading days left in November. Let's finish it out strong and start December with an absolute bang. Peace out, guys. So you can keep it quiet. See you guys.